You were listening to chartingwealth.com for Friday, the 8th of April, 2016. We had a down day in the markets as far as our three indexes go. The total market, the S&P 500 and QQQ. A big down day on Thursday. Let's dissect it and see what we see. Well, the market, when we look at IYY, which is the total market, we're looking at our two-day chart, which, as we talked about, has now crossed over the two-day trend line. It crossed over during the course of the past two-day candle that closed out on the 6th and the opening candle on the 7th. Again, it's not closed out at this point, but it does show strong down movements having crossed over the two-day trend line. We don't have a crossing yet going down. The warning that we gave yesterday about how close the derivative oscillator, the derivative oscillator was to switching over. It's not done that yet, although the derivative oscillator is getting very, very, very low. But how close the MACD and the signal line are to crossing over going down. This market is long in the tooth, been sliding sideways pretty much since the 21st of March. That was a Monday, a couple of Mondays ago. And what have we seen happen? Well, we've now had our two-day trend line violated. We're continuing to lose speed on the derivative oscillator. We're getting close in the total market to a crossover going down, it appears. Now, let's look at what happened on the 4-hour chart. Excuse me. The 4-hour chart shows down movement in the morning. Market opened. Actually, it moved below in the morning the two-day trend line. It had crossed over, if you recall, on the morning of the 5th of April and slid sideways for a while, made some up movement in the afternoon on Wednesday, and then, of course, dumped on over again. It was already in a down move. Derivative oscillator had switched over about the same time the MACD rolled over, so it continued that short-term movement. Now, again, it's not pulled the whole market over yet, but it may be on the way to doing that. That's why we're cautious. We're watching to see what happens and see if that actually does occur. But we have every indicator except the MACD crossing over and the derivative oscillator flipping over. We have already seen the down movement. We crossed over our two-day trend line. We're already in a negative on the 4-hour chart with both the derivative oscillator and the MACD. But it's that big chart that hasn't flipped yet, but that may be on the way. We'll wait and see what happens on Friday. Now, let's immediately jump into SPY. What is that? Standard & Poor's 500. It too has been sliding sideways since sometime, since sometime around the 31st, and has not gone above the high that the market hit on the two-day candle on the 31st. And what we have that we're seeing is, again, MACD and signal line are getting close to crossing over going down, and the derivative oscillator's lost a lot of its speed, and we pushed through the two-day chart throughout the course of the first day of the two-day candle on the 7th, Thursday the 7th. So we shall see what we shall see. That candle's not done yet, but we'll see if indeed it stays below when it finally closes out. Now, let's take a quick look at what went on intraday on the S&P 500 as depicted by SPY. Market opened down in the morning but did not cross through and stay below the two-day trend line. It did cross through it at some point but didn't stay below it. But in the afternoon, the big down movement, actually about twice the length of the candle. When we look at the wick on the bottom, we see major down movement. Of course, it already crossed over going down back on the morning of the 5th of April as far as our short chart goes. So again, be on the lookout for a possible big down move when the two-day chart, if and when it crosses over. Don't have that happening yet. Again, we're not hyping anything up because we have to see it in the charts before it's real for us, right? Okay, just so you know, total market was down 1.11%. For the day on Thursday, the SPY Standard & Poor's 500 was down 1.21%. Now, the biggest loser throughout the day on Thursday was the Qs, which had been the biggest gainer the day before, particularly on the 2-day candle on the 6th and the 5th and 6th. So what do we see actually going on with the Qs? Well, we have a spinning top, lots of indecision, a down move of 1.48%, still above the 2-day trend line, so we're still above it. But we're seeing weakness. Don't have as much weakness as we saw in the S&P 500, although derivative oscillators lost a lot. But as far as the MACD and the signal line go, but it could, again, just like the rest of the other two indexes that we've seen, it could be moving that way. Let's see what happened intraday and how much weakness we see. Well, of course, it was trying. The MACD was trying to push through the signal line. It did not make it. It actually started off with a big down move in the morning, followed up by a down move in the afternoon, came down, almost touched our 2-day trend line, but still above it. But we are in a confirmed down move on the short chart, that having happened on the morning of the 5th of April. So again, a down move in the short chart does not mean an overall market down move, so continue to watch. Although, as I have been saying, the market has continued to try to move up, but it's not gotten to its previous highs, and it keeps attempting to move higher, but again, just doesn't look like it's going to be able to sustain that for the long term. But again, more liquidity, more good news, Fed speak. If the markets start getting jittery, can send it on up again, because I'm telling you, this is a house built on sand, and the government has a lot more sand left. So let's just continue to watch. Now, going to go back for our last chart to the 2-day chart, and what do we see as far as gold? Gold up big time, breaking through the 2-day trend line, although it's not been a crossover going up yet. Derivative oscillator still has a lot of down momentum. It's been reduced, but it is not a confirmed up move at this point, because we don't have the derivative oscillator and the MACD crossing over, but a big up day for gold, 1.43%. The Bollinger Bands have tightened up quite a bit. These are volatility bands. We depict them on our charts with blue dashed lines, and the Bollinger Bands are good just for showing you how much volatility there's been, and the market had tightened up a lot over the last 3 2-day candles. It just pulled together. It's basically because it had been sliding sideways for a while. But a big up day, if we look at how that played out in gold, again, still in a confirmed down move on the long chart. On the 4-hour chart, what do we see? Well, we see a huge spike down in gold in the morning and a big spike up. And then gold pushed on up further without that spike down in the afternoon. So very interesting moves in gold. If you do recall, gold crossed over on the 4-hour chart back on the 5th, and then sort of dumped over in the afternoon of the 5th, and then down on the 6th in the morning and the afternoon, but popped up on Thursday the 7th. Well, that is where we are. Gold a bit schizophrenic, up on the short chart, down on the big chart. We have down moves on our 4-hour charts as far as our indexes go, and we are just waiting to see what's going to happen with those big charts, because big charts, big money. That's what we're looking for, to see if that actually switches over and moves down. If you've got questions, concerns, want to know more things, want additional training, please let us hear from you. Follow us on Facebook, Twitter, Instagram, YouTube. Subscribe on iTunes to our daily podcast, and we have a new iTunes program. It's our Charting Wealth's weekly review and forecast. So sign up for that too. Thank you so much for listening. ChartingWealth.com is the website. Sign up for our daily newsletter, which is, of course, this podcast and the weekly podcast. In addition to signing up for that, 2 bonus items. You will get How to Read a Stock Chart, a link to our video, 15 minutes of valuable information to teach you what it is we're looking for and trying to do in being prescient in calling where things are going and jumping on board a nice trend. In addition to that, you'll also receive a link to our layout that we use at freestockcharts.com. You can go to Free Stock Charts first, set yourself up a free account, and then you hit our link and it'll open up the layout that we currently use. So thank you so much. You can get all that by going to chartingwealth.com and subscribing. Thank you so much. We love to hear from you. All the best from chartingwealth.com.